This is Converge, a podcast from Convera. Come with us as we shape the future of finance.
Welcome to Converge. This is the first episode live at Money2020, and I have a terrific guest who I'm very fortunate to be joined by. Alisa DiCaprio is here from R3. She's the Chief Economist, which is R3 is one of the biggest technology and service providers in the blockchain space. They're focused on enterprise blockchain software, and they actually started as a consortium of banks, but the company's focus is now sort of on secure and confidential blockchain-based software, and it's made them really an ideal partner for a lot of financial services organizations. So welcome, Alisa. Great to have you here. I just caught your talk down the way where the four of you covered the future of digital money, specifically CBDCs, stablecoins, and we'll jump into some of those topics. But first, can you just share a little bit of your background, sort of what led you to where you are now as Chief Economist at R3? And what is the role of Chief Economist at R3 really entail? What's that like?
I get this question all the time. So thank you for having me here. I'm super excited. The role of Chief Economist in general is as head of research and also to kind of do a lot of the forward-thinking strategy work for the different products that we have. So for example, when we started doing central bank digital currencies, it was really around what is monetary policy, what is financial stability, how can the technology be designed to make sure we do this? So that's a lot of what I do. It's making sure that we use all of the internal knowledge that we have. So, if we're working on a new product, who in the company can do that? There's always somebody. In terms of my background, I joined R3 from Asian Development Bank, where I was a trade economist, and I worked largely on digitization and trade finance. So I was working with the private sector and with the public sector on regional projects, trying to figure out how to make emerging economies more competitive in the global economy. And digitization was becoming a big part of that. Blockchain was becoming a big part of that. And so I moved over to R3 to start doing this from the private sector perspective because it moves a little faster.
Yes, indeed it does. So the panel you were on, it discussed sort of broadly the future of digital money and whether that would be based on central bank digital currencies or privately issued stablecoins or perhaps both. So I thought it was important also that one of your co-panelists said that it's not a winner-take-all situation. There's different use cases out there. So before I ask you if you agree with that outlook, can I just dig into some of what you said about CBDC adoption, which was interesting, which is you mentioned there being this, quote, fundamental design problem when it comes to privacy. Can you elaborate on that and also how, if this is the case, how R3 is or might be working on banks to solve for that fundamental design problem if there is a solution and make sure that the form of data collection behind CBDCs becomes a public good rather than a public threat per se?
Sure. The problem that I was talking about was the fact that when you have a digital currency, you can collect all kinds of data. And in fact, that's a lot of the impetus for doing it because you want this data. It can make your monetary policy easier to execute, for example. But if you're a consumer, you probably don't want your government to have that data. Maybe you don't mind, but often you don't. And so adoption is going to be lower the more data that you collect. But the efficiency of the CBDC could be higher the more data that you collect. And so what is that balance? And every live CBDC that we see in the market has come across that balance differently. Some collect no data. The EU, for example, has said that if they issue a central bank digital currency, it's not going to have programmability as part of it, so it will not be collecting that data. China, for example, collects all the data and has used that to expand their program. So that's really the problem. Now, can this be solved from a technological perspective? I guess so, but it's really more of a business problem. It's really more of a problem of consumer behavior, which we don't understand because we don't have enough circulating CBDC to know how consumers will react to it, as well as how comfortable is the government and how comfortable are people with their government collecting this kind of data.
Right. And that's a variable answer to that. So back to the topic of there's not a winner who will take all in these spaces. I assume you agree with that. And does it have to be a zero-sum game, or do you think stablecoins and CBDCs can coexist and have obviously different applications, different use cases?
What's interesting is if you look at countries that have issued CBDCs, they tend to be different than the countries that have large stablecoin economies. So they tend not to be in the same place, but there's no reason that they couldn't work together. One thing that we talked about in the panel was use cases, and they can certainly have overlapping use cases. There's no problem with that. You're going to have different populations using it for different things, but they could certainly be the same thing, which is kind of exciting. Look, we're diversifying the payment space, which is something that we're all trying to do. It makes it a more vibrant space.
Yeah, absolutely. So you spoke also of tokenized deposits in the private sector are being experimented with a lot. Now we're hearing a lot about those experiments alongside the CBDC experiments at the government and multilateral organization level. You mentioned the BIS, the IMF. So there's obviously distinct use cases. What specific use cases do you think CBDCs in particular excel at, which stablecoins simply can't do?
Okay, that's a very interesting question, because stablecoins can do most of the stuff that cash can do, right?
Yeah.
So cash is basically your use case. You just kind of, we can start with that. Can stablecoins do what cash does? Not yet, because you can't really use it to like pay for coffee. I mean, you sort of could, but not really. Most people will not accept it. And so I think it becomes a question not just of usability, but also of acceptability and merchant uptake. So how are merchants going to take your CBDC? That's unclear.
Right.
Even where we see CBDC already being issued, merchant uptake is very, very low. Similar to what we saw in El Salvador when they, made Bitcoin into a legal currency.
Yeah.
Merchant uptake, 20%, maybe. If you look at the Bahamas, they often publish lists of merchants that are taking it. Whereas with stablecoins, you tend to use it online rather than in a physical store. And so that makes it much easier for it to proliferate.
Yep, makes sense. So when it comes to programmable money, are the roles of government and the private sector becoming clearer? Or would you say that they're still evolving, and are there things still to play for, or is a piece starting to break out in a sense?
I think there's a role for everybody in this. If you look at the history of money, the private sector has historically issued private money.
Yeah.
And you see this all the time. Like if you go to a concert or something and they give you, tokens that you can use to pay instead of money because they don't want you using money. This is something we've had for decades. So I do think that everybody is involved in it. I don't think it's really changing roles, right? Because if you're issuing a central bank digital currency, you have to be, by the definition of the instrument, a central bank.
Yep.
If you issue a stablecoin, you could be anybody. It could be you, it could be me, it could be a central bank, doesn't really matter.
Yep.
So I think the issuers is where you see the differentiation.
Yeah. So as with any new application of tech, there's always a concern about, obviously, interoperability. A lot of the panels we're talking about what's being done to address that issue with existing systems and the infrastructures. Do infrastructures have to be totally torn down and replaced? How do CBDCs fit into existing payment infrastructures, particularly some of the sort of that essential plumbing? And I'm thinking like the real-time gross settlement, which enables interbank payments, for example. How are CBDs fitting into this existing picture at the moment?
So if you can wait for like a week, we have a blog coming out on this.
Aha. Can you preview it?
I can.
Nice.
It looks at, if you have a real-time gross settlement system, an RTGS system, why would you need a wholesale CBDC? Doesn't that replicate each other? So I won't answer that question exactly, but I think an important point that gets to what you're asking is that most CBDC, in fact, probably all of them, I just don't have complete insight, that are issued today are settled using RTGS. So there is this integration into the existing infrastructure already, because the existing infrastructure is how everything works. And a central bank most likely does not want to rip that apart.
No. Right.
That's really risky. So what you do see is this integration.
Yeah. I guess just what are the biggest obstacles to CBDC adoption in the here and now that you're seeing? And what is like the most viable path that you see towards overcoming those obstacles, or that one biggest obstacle? Because we can't focus on all of them.
Oh, that's a very good question. Obstacles include everything from merchant uptake to wallet providers. So how would you issue a wallet? Who issues a wallet? Is that disrupting the financial system? So there's some reluctance from the central banks because you need to make sure there's financial stability. So there's a little bit of friction there. There's some reluctance from the merchants because they need to know that consumers want to use it. there's some reluctance from the consumers because they want to make sure merchants take it. And they're unclear about the privacy and security aspects. So I think there's frictions on all sides, but which makes it even more amazing that we're seeing so much movement.
I know.
Right?
Yeah, it's true. And obviously, we're also seeing movement concurrently in AI applications and payments. So I wanted to ask, because there's some circles that are sort of seeing a possible combination between AI and programmable money and CBDCs, making transactions not just faster, but also smarter, more fraud-proof. What's your take on the AI combination with these new forms of money? Do you think AI will be a key component of CBDCs and stablecoins if it's not already? And what's that role going to look like in the future?
I think AI will definitely be a part of it. We also did a blog about that, but last week, so you can read it.
Wow. I feel like I've read your whole blog already, but I haven't.
And it looks at central bank digital currency and AI, and it asks the question, central banks are using both of them already, so why not use them together?
Yeah.
And it sort of looks forward, not at the exact use cases of AI, but the use cases of AI and CBDC, like you were asking. And so the way that I think about it is that AI is about data analysis. CBDC is about data collection. And so what can you do that would make, that would benefit the central bank that uses AI and CBDC together? And really what I work on is, there's two maybe differentiating factors that central banks have. One is discretion versus rules, and the other is this kind of adoption versus privacy that we already talked about. So the discretion versus rules is something that, when you're a central bank, you want to have discretion when there's a crisis. You want to maybe call a committee and discuss what to do and then do those things. Whereas with a central bank digital currency, you could program it such that there was a crisis and then it automatically executed whatever the rule was in that crisis. There's some reluctance to move towards a rules-based approach, although many central banks already use a rules-based approach. AI could help us move closer to that. Because if there's a crisis, you've gathered this data from the CBDC, you could use the AI to analyze, say, your options, and then still converge the committee and talk to the committee, but then have them enact this. So it just moves you closer to the rules-based approach.
Interesting. Yeah. Which countries or regions are sort of making a strong impression right now in terms of their maturity in working with or implementing CBDCs? Are there particular regions that are doing notable implementation that should be called out?
Ooh, okay, that's an interesting question too, because if you look at the CBDCs that are live today, they're emerging economies. So that's leading this conversation, which is one of the first times that we've seen that. And I find that very, very exciting.
Yeah, it is exciting. Yeah.
Where we have a lot of research, it's advanced economies. US, UK, EU, really doing some deep research, BIS as well, and IMF. But now where you see the most movement, I would say Middle East. They are doing, they're going gangbusters, right? Different countries in the region, even, kind of regional integration projects, really thinking about how you can use this, how you can issue it, what types you issue, what are the design decisions. So I think there's a lot of movement there that's really exciting and bears watching.
And do you think that because of that, those regions will sort of evolve into digital asset hubs over time? Are they really investing in the digitization of money as a foundational aspect of their economy and powering new innovation? Is that something that will define them, do you think? For the Middle East, as an example.
Absolutely. Do you want to go back to using cash?
No.
Yeah,
no.
Me neither.
I guess I'm moving to Dubai, right?
So it's this movement is global. It's really around, nobody knows, there's no best practice yet.
Yeah.
And so I think what you see is those countries that are willing to be on the frontier and the sort of cutting edge and say, okay, what do we do next? Let's just try it. And those countries that are kind of holding back, like the US.
Yeah.
Let's see what happens, see what mistakes they make, and let's not make those.
Sounds like typical US US way to be. So I guess this begs the question, is this becoming a geopolitical issue? Are you seeing preferences for example, in the US, preferences for a private sector solution versus government solutions with digital currencies? Will that mean that, the US will sort of be more favorable geopolitical or in a political sense to a stable coin backed by the US dollar versus, an actual CBDC, which we know is a hot button issue politically in this country? Sorry, I'm not in the US right now. Sorry, in the country where I'm from. What's your take on how much of a factor that's going to be?
I think this is pretty interesting too, because when you hear politicians talking about CBDC, you wonder how much they actually know about it.
Probably not much.
Yeah, probably not much. But in terms of the decisions that are being made, this is where it gets pretty exciting. So I don't see the U.S. dollar being replaced as a reserve currency or anything like that. Yeah. But what I do see is this, diversification and real interest in experimenting with new forms of money. In terms of geopolitics, I think what's interesting is if you look at the wholesale CBDC space, we're seeing a different alignment of countries than we've seen before. So if you look at Enbridge, for example, those countries are not natural trading partners. You would normally expect regional integration with natural trading partners or, countries that you typically interact with a lot. So CBDC is really leading to these new types of interactions and like a completely new geopolitics of kind of techno-nationalism and, how we're using digitalization for the political process.
Yeah, techno-nationalism. That's well put. So follow up to that, are there new geopolitical dynamics we're seeing as a result of CBDC rollout that we didn't sort of see before? Is there anything that has come to play in, let's say, the last couple of years or so that weren't like part of that initial sort of picture that we discussed already?
Besides politicians now using CBDC as a platform, which is kind of weird, I don't see too much of that coming into the real economy. The discussion tends to be among the technologists rather than among the politicians. Where the politicians get involved, they don't quite understand what they're doing yet. What has changed, and I think is pretty exciting, is regulators. So regulators 4 years ago had no idea what was going on. It was just kind of annoying working with them. Now they know just as much as everyone else. And they're doing an absolutely excellent job kind of, understanding how to protect consumers, how to protect the economy, and still let innovation thrive. So I think that's been a big change, which is really important.
Yep. No, that's super, super crucial. So there was a blog that I noticed that you wrote earlier this year, I think, which asked if 2024 would be the year that cash could come back. Are CBDCs a bet on cash, or is that something totally separate?
100%. I mean, cash is the only form of payment that's issued by the central bank, that's issued by your government. And people are turning away from cash. Not everywhere. If you remember, Sweden tried to go cashless and it didn't work. It didn't work for very specific reasons because it excluded certain parts of the population that depend on cash. Immigrants, tourists, the elderly, kids. We need a way to keep an instrument and a payment system that the government is able to maintain. Because, if the private sector doesn't see it as viable anymore or profitable, they'll close it down. So it is a public good. You need the government to build that. And CBDC is an effort to keep cash as a way to keep the infrastructure.
Yeah. So just lastly here, what are your other big predictions or expectations for the rest of 2024? Let's keep it hyper short term. Any predictions or expectations you want to share?
I think 2024 is going to be a pretty exciting year. We've had a quiet few years and a few years of some deep research, mainly because investment was so low. Mm-hmm. There wasn't a lot of kind of new features coming out in different projects. It was more like, let's harden the code and make sure it works. So I think 2024 is really the first year that we're coming out of this. The economy is better, trade is better, and so we're seeing a lot of experimentation. So I think 2024 is going to be a lot more exciting in terms of instruments that we see, in terms of regulated instruments that we see. And I think maybe that's the space that I'm most excited about is really looking at the regulated space and how this space is expanding into new infrastructure, new instruments, really around the digitization becoming fundamental part of the architecture.
Yep. Super exciting. All right. Well, I've drilled you enough. Thanks so much, Alisa. It was great having you. Super first guest, and we hope to talk to you after 2024 about all the things you expect in 2025 and beyond.
Great. Thank you so much.
Thanks for being here.